Hi, everyone. My name is Petra-Ann Brown. I am the founder of Brown Financial Solutions and the host of the Island Money 365 podcast. I'm excited that you're here today. I know we had some technical difficulties, but we're ready to go. So I am a financial educator. I work with organizations to provide financial literacy to their employees or the individuals that they serve. I also work one-on-one with individuals and families just to help you take back control of your money. So I do want today's workshop to be conversational. So use the chat, raise your hands, do everything you need to do. I am here. I'm here to answer your questions. Because I make sure that I want to make sure that you receive the information that you need so they can create a shift in your finances. It's all good to be here and hear good things and feel inspired, but I need you to also take action. So whatever you need to hear, ask those questions and I'll be happy to answer them for you. Let them know if they will be receiving some activities through the chat. Also, just want to give you a heads up. You'll be receiving some activities through the chat, throughout the workshop, just to keep our engagement up and just to see where you are and your understanding. And I'm trying to get to the next slide. So just bear with me. There you go. All right. So our workshop today is called Peace of Mind. And the reason being, because at the end of the day, when everything is said and done, the reason why we're here this afternoon, I would say a beautiful afternoon, but it's cold. It is cold outside, but it's still beautiful if you like the cold, right? The reason why we're here today, taking time out of work, taking time from our families to be present at this workshop today is what is it that we're looking for, right? At the end of the day, we're looking for peace of mind, looking to make sure that we can take care of families, our loved ones, ourselves, and be financially secure in what we're doing in our lives to get to where we want to go, whatever that may be. For example, growing up, there's a lot of things I wanted to do, but the answer was no, right? And now I'm able to do it for my children. So what is it that we're looking for? What is it that we want? Why is it that we're here? What is it that we don't know we're missing? And that's why we are here. So today's workshop is about credits, understanding your credits, debt, right? Fun stuff, understanding debt, how to manage it, how to take care of it, and how to utilize this to our advantage. But before we can do any of that, before we can even go down the road of, oh, we're going to pay off our debt, this is how we pay off our debt, we have to have a vision. We have to know what is it that we're looking for, working towards. We need guidance. And I'll always tell my clients whenever we're starting out, what is your vision? What is it that you're working towards? What is it that you want? If money was not an issue for you, if you have all the money in the world, right? What would your life look like? What would your career look like? What would your car look like? What's your rich life? In a sense, that's what I'm asking. What's your rich life like? And actually, I'm going to give you 30 seconds. And I think, Ray, you have a phone? 30 seconds. And I really want you to think about this. Do not put any barriers up. Just think about it. If money was not a problem for me, what would my life look like? What is my rich life? Why am I here? And I want you to go deep. Let's say I want to go on vacation. Okay, that's fantastic. How do you want to go on vacation? Do you go first class? Do you go on luxury? Do you have a private jet? You bring your entire family with you. Where are you going? So really, I want you to dig deep and go ahead. You got 30 seconds. What is it that you're working towards? What is this life that you want? Your rich life. So I want you to take a minute and just think about that. And Ray, let us know once you reach that 30 seconds. All right. So does anyone want to share what their rich life would look like? What's their dream? Money's not a problem. Remember, this is your life. What do you think? Anybody? You can leave a chat, take yourself off mute. Anybody?
I'm there.
All right, go ahead.
So This is Tomorrow No Taxes, and my dream life, I would live by the beach with a private pool. I'll be working on my personal garden, whether it's vegetables or flowers, and I'll be surrounded by family.
I love that. I absolutely love that. I'm not a gardener. I kill that's amazing. I kill what's that? Mint. And you can't even kill mint. I kill mint.
Yeah, I want to move. I want to move in with
That's
Tamara.
amazing. Her. Thank you for sharing. Anybody else?
I, can you hear me?
I can't hear him. Can you hear him? I can, but turn up the volume. Okay, 1 second.
Yeah, Marty, you can live next door. We're surrounded by my family too.
That's what I said. I want to be right there with you.
Go ahead, Marty. Tell me what you're doing.
Well, I was retired, and and I was living most of what I wanted, and then I met Steve, and Steve convinced me to get out of retirement and start working full time again.
I'm sorry, Marty. Can you repeat for me? Don't mind us here. Can you repeat for me?
No, so I'm a little different situation where I was retired and I was living the life I want, but I came out of retirement to help Steve with his dream, and so now I'm working full time again.
So at least you had a taste of it. Are you going to go back to it, or?
Yeah, well, once we get this thing up and running, yeah.
Awesome. I'm glad. My dream life is to do those biking cruise. That's just, looking at those commercials, I mean, that's just strict money, right? You're like, whoa, that looks very nice. Just my husband and I. And the kids are off, just my husband and I doing the biking cruise, sailing around the world. That'll be awesome. That'll be extremely awesome. I have my technical assistant increasing the volume for me, so thank you for your patience. Okay. Good. All right, thank you so much. All right, so thank you for sharing. I really appreciate that. And tomorrow, please grow me some vegetables. I'll take it. I'll buy it.
I said that was my dream. I didn't say I know how to do that now.
Very good point. Very good point. Yes, I can hear everybody now. Fantastic. So before we start talking about debt, let's get back to that. We have to have a vision. Have to have a direction of focus of what is it that we're looking for, what is it we're working towards. Because on this journey, on this financial journey, it gets hard. And you have to remember your why. Why is it that I'm working so hard? Why am I making all these sacrifices right now? Right? And if you can remember your why, your vision, then it will keep you focused. The next thing that we have to do is a budget. Yes, a budget. I know some people might squinch or whatever you may do when you hear the word budget. Whatever it is, I need you to get past that, right? Because the budget is the single most important thing when it comes to taking control of your money. If you do not have a budget, where are we going to start? To start paying off this debt or taking control of our money? You don't, because you might think you have $10 in the bank, but in actuality, you have an outstanding check against that $10 or $15. And technically, you're negative, but you don't know that. Why? Because you're not telling your money where to go. You have no idea what's happening with your money. So before you can do anything and take charge of this debt, pay off your debt on the same track, you need to have a budget, telling it where to pay your money, where to go, understanding what's coming in, what's going out, right? And we're going to have another workshop on this, but let's give you a quick rundown. Your budget, your income minus your expense. What's your income? If you work for regular employee, your W-2, the money you bring home every week, bi-weekly, monthly. Some people work monthly. That's your income. Could be if you're side hustle, that's your income. Alimony, child support, money that's coming in, that's your income, right? And then we're going to take away our emergency fund. Why? Because you have to pay yourself first. Oh, I don't have any money. to even cover my expenses, you gotta pay yourself first. You have to pay yourself first. Because if you go on this debt journey, debt freedom journey, and life happens to you, which it will, it's gonna be right back at that same starting point. So we have to start building that emergency fund. Regardless if it's $5, $10, you start, okay? So, and the fun thing about it, the good thing I like, is that now your employer can send your money directly to your savings account. I would prefer you not to have your savings account connected to your checking account. I know we have that combo when we go to the bank and get a savings and checking, fine, keep that, right? But also when you have a savings account that's not in that same institution. Why? Why? Because I want you to have to think when you're taking that money out. When that money is connected to your checking account, usually people think, oh, I have money. No, you don't. Your emergency fund is for emergency. It doesn't exist. It is not there until life happened to you. So if you could have it at a credit union or in a high yield savings account, that would be great, right? And that little index finger kind of switched over back to the checking account. And you're not tempted to use it. And I always encourage people not to have a card, not to have a card with their savings account, their emergency fund account. Why? Because then for you to really take money out, you have to go into the bank. And hopefully you're thinking on your drive over there. First, you gotta drive over there like, oh, and you gotta go inside the bank. You gotta talk to a teller and say, I'm taking this money out. And hopefully it'll make you pause and say, do I really need to take this money out? Is another way that I can take care of this problem, right? So that's another way we do. And then, you have your expenses, which I like to break my expenses up in 3 categories: fixed, variable, and periodic. Reason why: fixed, you have no control, right? It is what it is. The mortgage is what it is. The rent is what it is. There's no wiggle room in that. But your variable expenses, like your utilities, even though they come every month consistently, you do have some wiggle room in it based on your usage, right? Your water bill is based on how much water you use outside of the base rate, right? Your light bill, how much light you use. It has some control or influence in the costs that you get every month, in your bill every month. And then your periodic expenses, like with your taxes every year, your, renewing your car registration. You can plan for those things. They're not surprises. You can still plan for them, but they're not on a consistent basis, like on a month to month. And, remember, you have to give yourself some grace when it comes to a budget. As I said, there's another class we're going to have that really breaks this down. But you get into, this is your first time doing a budget, it takes time. Because really, you haven't been paying attention all these years. So you might be going through, you make a list, and then you realize, oh crap, guess what? I didn't think about this. I need to put this in there. I need to put this in there. And that's how you start to build it, because the living, breathing document, right, is a reflection of your life. No one has the same, no two people have the same budget. I do want to give you some facts, and I want to share with you. 64% of the US population is living paycheck to paycheck. 59% of Americans cannot cover a $1,000 emergency. 72% of Americans say they could not live off their savings for 6 months, and 20% of high-income earners are living paycheck to paycheck, right? Why am I showing you this number? I'm showing you this because I want to show you that you are not alone, right? You're not. If sometimes we're going through our financial journey or going through our hardship, we think, man, I'm on an island by myself. You're not. A lot of us haven't figured this funny thing out from these numbers, right? A lot of us have not figured this funny thing out. However, I do want this to be a wake-up call. You do not have to be a statistic, right? You do not have to be part of the mass. You can decide, look, I'm taking control of my situation right now. Enough is enough. I'm not going to be part of this statistic anymore. I'm going to live the life that I want. I'm going to build a life for myself and for my family that I envision. You have that control. Now, what is your, and I said to you, what is your aha moment? When I had my aha moment, I had my first son, and, my husband and I were like, I need to buy diapers, right? And he was like, do you have to use a credit card? He was like, he doesn't want it, he's averted to debt. I should put disclosure, he came to the relationship without debt. I was one who came with debt in the relationship, right? But I'm like, I got frustrated. I was like, I need diapers. What I'm gonna do? I need to get diapers. I'm not gonna go to nappies, right? I'm not gonna do those hand cloth things. No, no, no. I have no choice. But here I am making what's considered good income, decent income, no, and I'm still using credit card as a bridge to the next paycheck. I could not buy a pack of diapers without putting it on the credit card, right? And I found myself just like, I worked so hard not to be in this position. Growing up, I was like, okay, I was so focused. I did well in school, right? Went to college, I did great. I got a great job. I did everything that I was supposed to do, not to be in this position, because I was determined this would not be my life. When I was young, I said, this will not be my life. But here I am, sitting in the same position as I was when I was younger, except that now instead of looking at an empty cupboard, I'm looking at a cupboard full of food, but paid with debt. What's the difference? The same feeling. Empty cupboard, cupboard full with food, but paid with debt. Right? And I had promised myself, my mom came here and cleaned floors, and I'm here not doing any better than she did. And I said, absolutely not. I was like, it ends with me. I was like, what is it that I don't know? What is it that I'm missing? What don't I understand? And I decided, you know what, I gotta figure this out, because this would not be my life. There is no way my mom made that sacrifice for me, cleaning people's floors, taking care of the kids in wealthy neighborhoods, to give me a better life, and I'm here living the same life over. Right? So I said, absolutely not. I love this quote. The only difference between ordinary and extraordinary is a little extra. It's a little extra. So we are here to put in the work today. So let's get talking about this credit stuff, this debt stuff, all right? Improve your credit, increase your buying and borrowing power. Because we know America, we run on credit, right? And not only that, but having good credit can definitely put us in a better position than if we have negative credit, right? So what is credit? Credit gives people the ability to obtain goods or services in advance of making payment. What do I mean by that? Let's take a look at that. Yeah. Really?
Yeah.
I'm sorry, guys.
No, you're fine. I just, you wanna sit and they can constantly see you.
Okay.
No, you can talk.
I'm too tall. I just found out I'm too tall. Okay. Let me sit down so you can see me. So sorry about that. Cards. All right. I'm not used to sitting down and giving my presentation, but
There you go.
okay. Hey. We're pivot. Luckily I wasn't wearing my heels. All right, here we go. So hopefully this is a little bit better. You can see my beautiful face here. All right, so what does that mean? Meaning, okay, so let's say you're going to Kohl's, right? I like Kohl's. It smells nice. I mean, right, they try to get you, they get me, Kohl's get me. So I go into Kohl's, I need some, I walk in, I see something that I like. I was like, wow, I want that. Now, it's either I don't have the money to buy it, or I'm deciding to hold on my money. Well, let's say we don't have the money to buy it right now, and you want this thing, you want to walk out to the store. You can't walk out of the store with it. Why? Because that will be stealing, right? That will be stealing. So you say, okay, I use my Capital One card, right? Capital One said, all right. Now Capital One said, okay, no problem. You want to buy this? You want to buy this sweater? No problem. I will pay for it for you with the promise that you will pay me back when time comes, right? So Capital One said, all right, Kohl's. So Capital One will be the lender, right? So Capital One said, here, Kohl's, here's the money for that sweater that my friend, you're not a friend, that Petra says she wants to go to wherever she want to go. Cole said, thank you, Capital One. I will let her go. Because here you go, Petra. Here's your credit. Have a great day. Now I walk in the store, very happy, with my bag, purchase, right? Put up my card in the bank, and then later, Bank of America in a few days, Capital One say, hey, I need that money. Remember that credit that you bought at Kohl's? I need you to pay me back, right? I need you to pay me back. And I said, okay, I'll pay you back, right? No problem. Pay back within the period, no problem. If you then did not pay them, you don't have the money, so you know what, I don't have the money to pay you back, Capital One, right now. Well, guess what's gonna happen? Now they're gonna charge you a fee, right? The interest, which is the cost of borrowing money, on top of what you originally paid for it. So the process is you go, you buy, you gave you the money, because using a credit card is a loan. It's a loan. You're borrowing money, right? You're paying interest on it. It's a term to it. It's a loan. And people don't think of it like that, but it is. And then that they pay for your services that you want, you're enjoying it, but you have to remember to pay it back. Any questions on that journey? Okay. I'm coming, guys. So here's a pop quiz. You guys take yourself off mute, because I think we have, I know the other glitches. You can take yourself off mute. What is the name of the 3 credit bureaus? Does anyone know?
Equifax, what is it, TransUnion? And I can't think of the third one for whatever reason. Experian. Someone just said it in the chat.
Yay! Welcome, welcome. Okay. It is not possible to dispute discrepancies on a credit history or report. Anybody in here or online? It is
That's
not
false.
possible to. Okay, good. And both payment history and outstanding balances are factors that are taken into consideration when calculating your credit score. True, very good, true. Thank you, thank you. All right, we're gonna talk about this in more details, but here we go. So let's break down the credit report, right? Credit history. The credit history reflects how you manage your debt. How does that work? How do the credit bureau get that information? Well, the lenders, your lovely lenders, just snitch on you. They tell your whole business to the credit bureau. They report everything to the credit bureau, right? So anything that you did, the amount that you borrowed, how long the term of the loan is, if you're paying it on time, if you're late, if you never paid, you're reporting all that information about you to the credit bureau. So know that. They tell all your business. This is not a friend. It's not a friend at all. You know that friend that you can't tell anything to tell your business? This is the friend that all those lenders reported to the credit bureau. Now, some lenders might report to all the credit bureaus. Some might just report to 1 or 2. You can ask who to report to if you're interested in that information, but just know the information when you take out something, a loan or any kind of borrowment or anything, like go to a bank, a car, anything like that, credit cards, is going to be reported to the credit bureau. Now, what does the credit bureau do? They collect all that information and put it together, right? Everything about you. And then they create what is called a credit report. So the credit bureau collect all the information from the lender, put it all together, put their algorithms, right? And decide to build a story about you, essentially. That's what they're building. They're building a story about you based on your borrowing activity, your repayment activity, and what you are as a person financially. What kind of, in terms of how you handle your responsibilities. And from that, from all the information that you gather and put together in that report, they give you a score. Any questions so far? But yes, go ahead.
They're putting that report together. How do they calculate?
Actually, your credit bureau do not give you the score. It's a whole new, it's a different organization that gives you the score. So Experian, that's okay. That's why I'm here. The question was, how do they come up with the score, right? Experian, TransUnion, Equifax do not give you the score. They give you the credit report because the lenders report the information. But the other entities that give you the score are two entities, FICO and Vantage Score. They're the one who go in the algorithm and tabulate, and based on the information that's in the credit report created by the credit bureau, give you that score. Okay. So the credit report is a summary of your credit history and your score. Now, you should know, hello, welcome. Hi, just come on in.
Oh.
And can you give them a piece of paper? Thank you.
I'll be back. I'm gonna meet with him today.
Okay. So, sorry about that, guys. So you should know that I'm sorry, I'm just getting back my bearings. Yeah, people walking in now. Yeah, so your credit report, you can get a free copy from annualcreditreport.com. That is the only place that is endorsed, that's the only place that is authorized as the source to get your credit report by the federal government. You are entitled to one free copy of your credit report annually from each credit bureau. Right now, since COVID, they have been giving free credit reports on a weekly basis. That can stop anytime, but they'd be nice. You can get a free copy of your credit report this month, next month, all for free, doesn't affect your score. But if that goes away, that's okay. But by law, by the Free Credit Reporting Act, you are entitled to one free credit report annually. Yes? All right. Now, the score will not be on your credit report. If you want your score, you can get at myfico.com and you can get a score. But do you really need a score right now? Probably not. Because if you look at your credit report, you can tell the situation, right? You can look at it and say, okay, I'm in a good position, a bad position based on the information that's on there. Also, you should know that if you are denied for any reason, any kind of credit, because of your credit report, you are also entitled to a free credit report at that time as well. You can ask them why, and if they say it was a cost of your credit, they have to give you a free copy of your credit report to show you why. Same thing happened if you've been a victim of fraud, identity theft. You're entitled to a free copy of your credit report if you've gone through those situations. Any questions? A lot of people always ask me about Credit Karma. Is Credit Karma a good representation of your score? It is not, right? Credit Karma is a starting point, right? Let you give you a gist of where you are, but Credit Karma, only two other credit bureaus give Credit Karma information, and that is Equifax and TransUnion. Experian does not report to, or Credit Karma does not get information from Experian. So that means you're not getting the full picture of your credit report, credit history from Credit Karma, but it is a good place to start. As we mentioned, the big three are TransUnion, Equifax, and Experian. So how does credit affect you? Your credit can affect you in positive or negative ways, right? Building and keeping good credit saves you money. A lot of money can save you tens and thousands of dollars, right? And bad credit can really affect your life adversely. So when we're talking about credit nowadays, your employer look at your credit history now, especially the kind of job you're going for. So it can affect your job, it can affect access to capital, it can affect the loan terms, because people with negative credit tend to get higher interest, right? Because you're considered a risk. And the reason for the higher interest and why you consider a risk is because they said this person might not pay me back. Therefore, they're going to put that money up front, right? Buying a home, at the end of the day, it can affect your emotions. It can be very stressful if you want to buy a car and can't get the money to buy the car because you don't have the money in the bank, right? So those are all things. Poor credit limits your access to capital, receiving higher interest rate, and it just affects you in so many different ways. Question?
Just like the job part is very interesting to me.
Mm-hmm.
Job potential employers checking your credit history or credit scores.
Yes, it's a big thing. When I don't remember if I don't know if when I started out they were checking it back then as they're doing it now, but a lot of employers are checking credit score. They think it's a reflection of the person, your behavior, and how you take responsibility or, and other things. As I said, if you're going to a financial role, maybe it's very important to make sure that you're up and up with that. But, it's very interesting. I agree with you. I agree with you. So here, I want to give you an example. Actually, I have a friend of mine who graduated college with me. And in college, she just take money out of the bank. And I'm like, you have no money in the bank. She's like, and she used to tell me, if the bank is giving me the money, then I'm going to take it. Right? She's going to take it. So essentially what she was doing was just overdrafting on her account. And me as a business major and she as a social work major, I'm like, don't do it. You're hurting yourself. Well, when we all graduated college, looking for apartments, right? She could not get an apartment. She had to get her mom to co-sign for her because her credit was so bad for different things that she has done. Not only that, she wanted a car, right? And back then, she could not get they told her she could not get an automatic car because automatic was a big deal back then. Like, you had the automatic windows versus the wind down windows. And she couldn't get the automatic windows. She had to get the one with the wind down windows, right? It was like a Ford, I think. And back then it wasn't a joke, right? Now we can laugh about it, but it was real serious because she wanted a car and she had to get the car with the basic model. The wind down windows, everything like that. Now every car comes standard with automatic windows, but this was a thing. And for example, when I graduated and my other friends graduated, because a group of us females, I went in and negotiated my rent term, my lease term. I was like, okay, I'm going to give you the first month, right? But I am not giving you, please. I asked them to waive last month, and I asked them to waive last month, first month. No, wait, let me get that right. I asked them to waive the last month, and I get the first month free, and I was able to get it. They put my credit, was not a problem. She could not get that. She had to pay like 3 months deposit, the first 2 months plus the last month, and that's not, So it's very serious. This credit thing can really affect you adversely. Whereas I was able to not put down last month deposit, just pay 1 month and get the first month free. Right? That's amazing. Because I was just starting out, I've gotten my first paycheck yet. I was like, this is what I need. And it's like, oh, no problem. I look at your credit report, no problem. This is what's up. This is just an example. I'm not saying that if you have bad credit, you're gonna get 4.25 interest rate, and if you have good credit, bad credit 12% and good credit 4%. No, that's what I'm saying. This is an example I want to show you. Now, if you want to get a vehicle, right? The same vehicle term is 5 years, right? But look at the monthly payment, $463 versus $556. The loan is for the same amount, $25,000. But look at the difference you're paying because of your credit situation. Now you can be like, well, that's not really a big deal, right? That's manageable. When you go to a bigger ticket item, you can see the difference. You can see the effect on you financially, right? Look at the difference in the 30-year mortgage, 179 versus 410. So while a person with good credit was just paying $429,000 for this house, bad credit is $660. Think about that. That's significant. So the bigger the ticket item it is, the more it's going to cost you. So, and not only that, but don't even think, you should never think that $1 more is nothing. It's something. You didn't have to pay that dollar. That dollar could have gone somewhere else. So I want you to change that mindset as well. It could have gone somewhere else to benefit you in another way. So yes, that dollar is something. That 50 cents is something. And in this case, thousands is something.
Hey, I have a question.
Yes, go ahead.
Just because I'm an underwriter, so based on reliability,
Mm-hmm.
I know you said that people with lower credit typically get higher interest rates.
Mm-hmm.
So when I'm evaluating these loans and kind of deciding an interest rate for the client, I guess my question is,
Mm-hmm.
wouldn't that kind of negate the whole thing? Like, I feel like at that point, that person wouldn't get the loan because if you already haven't paid so and so back,
Mm-hmm.
or you're late or whatever your case may be, why your credit score is low, and you're asking for another loan, like I just don't see how that person would then go and be able to get funding again. Do you find that it's hard, that it's almost impossible for people with like low credit scores to get funding from like banks or stuff like that?
You can get denied, but they do have programs that can help a person get back on their feet. So they do have loan programs with lower criteria or requirements that will help a certain group of people get back into the banking system or be able to get a loan to whatever dreams or goals they have.
Okay.
So it's that automatic no.
Okay.
Yes. Yes.
Sometimes people have medical history and they have high medical bills, so depending on what's the reason why the underwriting for look at the circumstances depends on
Okay.
So he was asking about, if you have bad debt, and you I may get denied. Not necessarily, it depends on the story. That's why you have to know your story. For your credit report, if you're going to go for credit, make sure you know more than the financial institution does about you and have your story ready. Life happened to me. This is what happened, but I rebuilt. This is where I am at now. And this is why you need to take a chance on me. You have to know your own story. You have to know what those numbers are saying about you. And then you can have a response to when they ask you. But if they're going to ask you a question, you don't have a response to it, I'm not going to give you any money, right? Yes.
in my previous life.
Mhm.
Denied, I would ask for, who was not used, I'd like to actually see that question. And sometimes when it's like, a denial is not just a denial. Sometimes you can't ask to see that as a denial. Whereas when what you can connect to that to someone, and then you can like.
I don't know if you guys can hear, but what individual is saying is that if you get a denial, if you go for something alone and you get a denial, you can actually speak to the underwriter or actually speak to the person to get a better understanding of why you were denied. And maybe you can present them with your story and maybe they can look at the criteria and change their response. But once again, remember they're seeing a lot of application. There's no faces to these. So if you want to call and explain, it's always good. I want to go in ahead of time and talk to them. They're people too, to make sure they're not going down a checklist, make sure they know you're more than that checklist.
And one more question, I'm
Mhm.
sorry, I know that's a lot.
That's okay.
Follow up on what she said,
Mhm.
so in terms of them being able to plead their case, I do agree with that. Now,
Mhm.
what are typically, just to your knowledge, what are typically I wouldn't say excuses, I'm trying to find a better word for it. What are the, I guess, reasons
Mhm.
that are more acceptable in comparison to others?
That's different. That varies from bank to bank. But as I said, if it's medical, I don't think they would look at that as harshly. Because I said, life happens to you, nothing you can do about that. If you're, negligent, you just didn't pay your credit card bill, or you just decide no. But, everybody's story is different. So it really based on your financial institution and what they would allow, will not allow.
Okay, thank you.
You're welcome. Are there any questions online? Okay. So what are the factors? So what are the common sources of negative credit? Poor repayment history. That's one of the big one. That's the biggest percentage in the score. The payment history. You have to pay your bills on time. Because at the end of the day, right? Actually, let's put it this way. If you have a cousin that's always borrowing money from you and never pay you back, are you gonna want to pay the money? You're gonna keep giving them money? No. When you see them coming, you're gonna run the other way, right? You're gonna turn their cheek or act like you don't see them, right? It's the same thing. At the bank thinking that gonna get their money back, they're not gonna give you any money. They want their money back. They're lending it to you, and you agree that I'm gonna pay you back. You understand? It's a loan, right? It's not a gift. So that's why when certain people come to me, my family, and say, "Oh, can I borrow some money?" I say, "No. I'll give you this, but I'm not lending you anything. I know it's not coming back." Let's be upfront about it. Stop asking me to lend you something when you have never given me back anything since I've known you. Stop it. I was like, but I'll give you this. If they ask you $10, I say, I'll give you $5. Right? Don't do it. Don't do it. So you have to pay your bills on time. We know life happens, but that's your priority, right? You borrow the money, it's your responsibility to do so. If the amount of debt you have is too high, your debt to equity ratio is too high, meaning that you have a lot of debt out there. You have a car note, you have credit cards, and, you know, your income is like nothing, right? It's too high. Lenders look at your debt to equity ratio, total debt versus your income. And if your debt, your account is too high, your default risk goes up.
You said total debt versus income?
Yes. So your default risk goes up. If you have too much debt out there and not enough income, what's gonna happen? There's a high chance of you not gonna pay this bill.
So when you say like your total debt to income ratio, what about someone who has student loans? Like that's an automatic. thing.
But as I said, they take those into consideration. Medical bills, student loans, they take those into consideration. They look at those.
So they look at that when they're creating your ratio?
No, they take it in consideration after they do the numbers and the calculation. Then they look, okay, what else is happening? As a lender, they're gonna look at, they're gonna try to read your story. Remember I said the credit report tells a story about you? They're gonna try to understand what's happening. Okay. And then we have the length of credit. Lenders want to see that you have long-term credit. Like they want to see that way they can make a good analysis about you. If you only have 1 month of credit, you can't really tell about a person in 1 month. If you see a couple of months, you can start to see a pattern, right? You can start to analyze and get a data from that information. You need information. Now, with that said, I know everybody say, oh, credit is, you need to have credit, but know that credit is how well you manage debt. At the end, right? Credit is how well you manage debt. So essentially, to have credit, you have to have debt. So think about that. Now you want to be smart with that, right? Then you have your credit mixes, meaning that they want to see that you can manage different kind of debt. So you have your car note, you have your student loans. And that's, as you start doing the adult life, you're going to have a good credit mix. You're going to have credit mix. I shouldn't say good. You're going to have credit mix, right? That don't mean right now you got to run out and get a credit card and then go get a car note to get this. No, you don't. Just as you go through life, you're going to get credit mix. Because you're going to want different things. You want to rent an apartment, you want to buy a home, you want to buy a car, all these different things. Take out a personal loan, whatever it may be, student loans, you're going to get that. And then access to credit. Now, let's say, you have 4 credit cards in the simple term, and okay, you're not using them, but you have like $50,000 combined. They might not lend you that money or think it might be at risk because you have the potential to put yourself in a serious situation. And remember, okay, so understanding your credit profile. So you have the credit report from TransUnion, Equifax, Experian, and then you have FICO and Vantage Score. Right? They're the one who give you the credit score, like I mentioned before when Ray asked about that information. Now your score might be different for each of them because they each have their own algorithms, but it shouldn't be a drastic difference. Oh yes, go ahead. I don't know. But I know that most lenders use the FICO score. Vantage score is where you get from like Credit Karma and stuff, and some lenders use it, but most lenders, especially for those serious mortgage and stuff like that, they use the FICO. Well, with a regular score, I'm talking about Dun and Bradstreet, that's different. With your business score, we're talking about regular consumer credit score, and they give you a number. They give you a number.
And your personal credit score impacts your business.
Yes, it does.
So it goes up here higher. That's when I look at it, that's why I'm confused with that alphabet. But I didn't know my personal.
So your credit history includes, this is some information that's included in your credit history. When you're looking at it, if you co-sign a loan, your balance, when the last payment was made, and the past information, the limit on your account, all this information they take into consideration. They look at it. Now, here's an example of a credit report. What does this tell you? When you're looking at this, what does it tell you about the person? You can come off mute online as well. What does it tell you about the person? Here, what's their story? Huh?
Nothing happens, no problem, but it's not gonna be one.
Yes. Yes. Something happened. They had a struggle in the beginning, but they got back on track and they're A-okay now, right? So see, you can tell a story. Because if this person has been
They look at it, that's what it looks like when they're evaluating it.
it's a copy of a credit report, yes.
Okay.
So you can see she had charge-offs, she was really late, right? But then she's been good for over a year. So that tells you something dramatic must have happened in her life that caused this to happen. Yeah, so many things. And that's why, as I said, you have to see what the story is telling you. Now, what makes up a score? Types of credit, right? 10%. Length of credit history, 15%. What's the biggest one? Your payment history, 35%. This is for the FICO. And for the Vantage, payment history makes up 40%. That's a big percentage. That's a very big percentage. Pay your bills on time and then watch the amount of debt that you have.
I don't remember who told me this before, but I was told that it's easier to make your credit score go down than it is to bring it back.
Oh, yeah. Yeah, it's very easy to get your credit score to go down. All right. So your credit score ranges from 300 to 850. You want to be in the very good with the FICO. You want to be in a very good area. But, lenders still do lend to the good. All right. You're not out of it. If you're in the poor or fair, we need to work on getting that together. And not just focus on, I get a lot of clients that come to me and say, I want to fix my credit score and fix my credit score. Okay, that's fine. But what caused you to be here? The credit score is a symptom, right? What's the cause? Why are you here? What made you here in the first place? Let's understand that. Then we can truly start addressing so you don't get yourself back here. Because there's a lot of creative ways to raise credit score. But if you have the same behavior, the same habits, you're just going to go back to the same position. And we don't want that. So here we go. The credit bureau only tracks positive credit history data. True or false? Yes. How long do credit bureaus retain your credit, positive credit history data? That's a question, I don't know.
I'm just gonna throw a random guess out there and say, I would say maybe a couple of years. I don't know.
Think about it. How long do credit bureaus retain positive credit history information? Anybody online? How long? Is it forever? Okay, anybody else? You better not go to Google. Better not Google it.
Celsa Ramirez, do you have an answer to that question?
Anybody want to answer? The people in here, individuals here, says forever. Anybody else?
4 years.
Okay.
That's the question.
The question is number 2. The question is, how long do credit bureaus retain positive credit information or history data? So we have forever, we have 4 years. Some people say 7. Okay, so the credit bureau keep information indefinitely if you keep the line of credit open indefinitely. But if you close it 10 years after it's closed, it remains on your credit report. Okay. At Chapter 13, bankruptcy stays on your credit report for how many years? Anybody else? Chapter 13.
Stays on your credit report for how many years?
Okay, very good. 7 years. And Chapter 7 stays on it for how long? Oh, by the way, Chapter 13 stays on it for 7 years, and usually, because they're watching to see you making a plan with the lender to pay it back in a plan, right? So you're showing, hopefully, you're going to show good payment history going forward, because you're in a program to get that situation settled. You're not just writing it off. You're going to pay them back in some form. Chapter 7, you're just writing it off. You know, they don't get anything out of you. Yeah. So what does, so, so chapter 7 bankruptcy stays on your credit report for how many years? Chapter 7. Anybody? Is that Katania?
I said it definitely.
No, 10 years. 10 years.
Are they both staying on for 10 years?
No, chapter 13 stays on for 7.
Oh, okay. I thought we were talking about that.
Isn't there a chapter 11 too?
Yeah, but we don't really talk about
Okay.
that. And chapter 7 stays on for 10 years. A longer period report reflects that the fact that chapter 7 involves liquidation of assets. So it takes some time and does not require repayment of debt like chapter 13, right? You have to liquidate those assets. Very good. Now, what gets us in trouble? Are you part of the consumption trap? Are you there? Why you are where you are, right? Consumerism is a notion that boosting the purchase of goods and services in the market is consistently seen as a positive object, meaning that you see those sales signs, just get excited. When my mom sees sales, she was like, we got to go buy this. I'm like, why, Mom? She's like, it's on sale. It's not good. I'm like, Mom, you're still spending money. If it's on sale, you're still spending money, people, all right? Less, but it's still spending money. And do you have to spend that money? We are very big on consumption. So we have to make sure that you're not just buying to buy. There's a purpose to it, right? I mean, that's buying to feel good. Because debt robs us of our income. If you think about it, if you look at it this way, if you were not paying any debt right now, how much of your paycheck would you keep? And what could you do with that money? Right? So ways to see if you're part of this consumption trap: buy more than you plan, run out of storage space. I know individuals that own a home, their basement is full, their attic is full, and they still own 2, and they rent 2 storage units. That's in my family, so I know. So, and I tell them, if there's no problem, look, if life is happening to you and you need a storage unit to keep your space, to keep your things in, fine. You know, you're renting, you have no room. But if you have a basement full of stuff and you have 2 storage compartments and you have not gone back there in 20 years to look at any of those things in there, that means you don't need it. So if you needed it, you'd be running back and forth getting it, right? To use it. So really think about it. And people are spending thousands. It's the biggest, I forgot what number industry it is, but it's become one of those big industries. If you drive anywhere, you see storage facilities everywhere. Just to put more stuff. Do you need it? Okay, if you need it, right? But if you don't need it, how much money could you be saving a year by getting rid of that? Having a tax sale. So not only would be saving money yearly by not paying that monthly fee, but also you can sell it, the stuff, and get money too. So think about that, right? Do you hide your purchases? Do you have purchase infidelity, money infidelity, hiding your stuff? Oh, this old thing I had it for a long time. No, you don't. No, you don't. That's yeah.
And then when she pulled it out and wore it, my father would be like, "Oh, is that new?" And she's like, "Oh, I've had this. She has had it because it's been something I've got for 3 months." Yeah.
That's not good. That's not good. All right. So let's talk about the different debt payoff methods. We have the snowball, the debt avalanche, the debt consolidation, the balance transfer, and pay more than the minimum balance. Look, you cannot borrow your way out of debt. You cannot borrow your way out of debt. You just dig yourself in deeper and deeper and deeper. Okay. So let's look at this. The debt snowball. I like the debt snowball. It's my favorite. It's the one I use to get myself out of debt. But basically, the debt snowball method, you target the account that has the smallest balance. So say you have a car note for $300. We know that's not real, right? $300, and you have credit card for $100. That's the balance. I'm going to attack the $100 first. So on the credit card, I'm paying $20 a month. On the car note, I'm paying $50 a month. I will keep paying the minimum balance on all the other debt and put anything extra I have on the credit card. That's the smallest one I'm attacking. So that's $20. I finished paying it off. And then now I'm taking that $20 that I used to pay on a credit card and add it to the payment of the car note. All right, so you're just going to keep rolling like a snowball. You try to build a snowman, it's hard. It's not easy as it look on TV. I tried. It's not easy. I have two boys. I'm like, man, this is getting heavy. But once you start the ball rolling, you'll get to where you want to go. And the reason why we like the snowball, because it gives motivation. It's encouraging. You get those quick wins, which we all need as individuals. We need those quick wins to feel like, oh man, I can do this. And then we have the debt avalanche. This is where you start off with the balance that the debt that has the highest interest. And people say, get to save money that way, but it's a hard hill to climb, right? Sometimes you might not see results right away. It might take some time, but you do end up saving money in the long run. So it's motivation or save a little money in the long run. Some people swear by the avalanche. I have clients that do the avalanche and they love it. Good. I like the snowball method. Once you pay off one, you're like, man, I did that. Can you believe it? And you keep going. Now the debt consolidation. People like to consolidate their debt, but I will be cautious. I will be cautious of this. Reason being, putting all that in one big payment can be a challenge, right? And if you do use those organizations that try to negotiate on your behalf, remember, if they're not lawyers usually, right? And they all they're doing is calling the lender to let you know to negotiate down your money. You can do it yourself. You don't have to pay a big fee for that. You can go and call and say, hey, life is happening to me, and this is what the situation is. What can you do to help me? And they are willing to work with you. There are. So you can go and do it by yourself. You can play the balance transfer game, but know that you'll be paying a fee to transfer the balance, and just make sure the interest rate is worth it. Some people say, I'm going to transfer it to a zero balance card. Great. Do you have a plan? So if you do not have a plan, you're going to be in a worse situation. Make sure you can pay off that balance within that time period they give you. So they give you 12 months. Okay, can I pay off $5,000 in 12 months? If not only are you going to be charged the interest that you would have charged for that 0% interest time, right? It's going to be compounded on your other interest plus the fee. So you're going to be in a worse situation. So it sounds good, but make sure it makes sense. Make it make sense, right? And, in anything, I will say, people can say, oh, I paid the minimum balance, more than a minimum balance. That's great. But if you really want to pay off debt, the snowball or the avalanche is a great way to go. Great way to go. And this is what it looks like. Hopefully you can see it, and it's kind of small on the screen, but this is what it looks like in picture form. I like pictures. Right? Does that make sense? Any questions?
Can you explain both the snowball and avalanche?
Oh, so the app, once again, okay. You're gonna list the debt in the order by the highest interest. So if you have a credit card, it's 23%, and you have a car note, that's realistic. 5%, you're gonna pay off the one with the 23% first. The one with the higher interest.
The question, are these both good, or is one good, one bad?
No, depends on your preference. Yeah, you're paying off your debt. You have a plan for it. Yeah. Yes.
The other one is strategy. Yeah, you have to really commit
Mm-hmm.
to the avalanche and make it work for you.
Yeah. And that's where the vision board comes into play again. Like, once you start going through this journey, you gotta have that vision board in mind. Like, this is why I'm doing what I'm doing. I often tell my clients to, on their credit cards, first of all, to park it. And if you ever have a spending problem, park that credit card, lock it up in a safe, because you don't want identity theft issue. Lock it in a safe, and then just go out your normal life. And you realize the withdrawal that you have, the pain that you have with it, right? Like, oh my goodness. But not only that, but on your debit card, put a little note, saying, is this bringing me closer to my goal or further away from my goal? Every time you pull it out, you can put on new home on it, whatever it is that your goal is. Now, every time you spend it and you see it, we're like, oh, give it time to pause a little bit. I do cash. I do cash as well.
But in 2025, I made a concerted effort, I'm making a concerted effort to use my card just to get the points.
Don't get caught in that trap.
Well, no, I just pay it off at the end of the month.
Mhm.
Whatever I spend has to get paid off at the end of the month, so I'm keeping it down.
Do you make a strategic move to only spend a certain amount? What's happening is that someone is saying that they decide to use their card for points. So do you make a certain amount a month that I'm only gonna spend $500?
That's it.
Okay.
I have a specific amount, and
Mhm.
so that way, you know, if I wanna get gift cards, like some of these cards, Chase Bank
Mhm.
and, Goldman Sachs, their benefits are outstanding.
Mhm.
So by me paying cash, which I started doing last year,
Mhm.
I don't get any benefits.
Mhm.
I get no benefits,
Mhm.
so.
Besides peace of mind.
No, but it's,
Yeah.
I'm spending the same amount
Yeah.
every month, and
Mhm.
I have to, it's the amount that I know I spend.
Yeah. Okay.
And then I just pay it off at the end of the month, so I'm not carrying the debt forward.
Yeah, that's
Now,
fine.
if I get caught and I start carrying the debt forward, then my
Yes,
avalanche is snowballing.
yes. So, if you want to play the points game, know that if you're carrying a balance or if you're paying interest, you're not winning at the points game.
Yeah.
They have you. All right. But if you're paying your balance off every month in full, then you can play that game. So life can easily happen to you. So be careful with that. All right. So we have an activity that I want you guys to do. Do they have it for time?
Which one is it? That dilemma? I got the, yeah.
Yes.
They
How
have it
about for
right
the
here.
individuals on Zoom? Do they have it?
Yes, I put it in the Zoom. I put it in
Okay.
the chat earlier.
So can you put them in group?
Greg, you know how to put them in groups?
There's only
There's
two
only
people?
3 people, Tamara, Celsa, and Steven,
So
so
put-
they can work together.
Yeah, put them
Yeah.
work together.
Yeah.
So we have this activity. I want you guys to work together and work through the scenario and see what you come up with, what a solution you come up with.
So in the classroom, are we working?
Yes, you
together?
guys working together.
Okay, come on, class, let's get it together. Figure it out.
You guys on Zoom, Salsa, Tamara, and Steven, and you guys can work together.
Are they in the room
Okay,
together?
do they have, this is.
If
the
put them in a room,
financial
because then they can't talk to each other. That's for later.
Okay, so analyze the person's financial situation, where is that on, my page?
It's right there in front of you. You got them in a room for me, right? Okay, it's coming, guys.
What we gonna do with Jamal? Wants to buy a home in 3 years. But he doesn't have a lot of money.
I would say, oh, sorry. Oh, no, I was gonna say, I think it makes sense for him to pay the credit card first, because he said he wants to get a home in 3 years.
Yeah.
It seems like a long time, but that's fairly soon,
Yeah.
as opposed to student loan payments, which there's some people who, for example, there's some people I work with
Hmm?
who still have student loan payments outstanding.
It's not working?
Get the funding, so.
Credit card.
They're not doing it.
Yeah.
Over a student loan, it's like it's almost accepted.
Yeah.
Yeah, that's what I was gonna say.
Student loans have lower interest rates for a reason.
They're gone.
So, but paying off that $1,200.
You hung up on them?
Then
Uh-huh.
we're gonna start.
Okay.
focusing
Right,
on-
once you pay that.
Right, so now that's gone, now he can put that payment either in the bank to add to his savings, or he can put extra to the student loan,
Well. Trying to save something.
trying to save for a home.
That, student loan is still gonna give us that, debt.
Right.
I think it's gonna be investment in itself.
Yeah.
So I would say put the money that after paying out the 1,200. But that money that would take savings.
Yeah.
You say with what money in the savings, because I was trying to write down what he was talking.
No, what I was thinking is that just get rid of the credit card debt,
Yeah.
and then because they're saving for a home for 3 years, You can still make your regular payment
Oh, how you
for the
doing?
student loan, but that doesn't have a heavy negative.
There's an activity that, my
But
company.
increase your savings, you can bring down
I just heard you say something like
your
that.
amount.
Just read it to her.
If he's paying $150.
Okay, that's all right. Well,
$1,200.
you and the market.
He's paying $150 in 7 months, that $1,200 will be paid off. So $150 that he's paying on the $1,800, on the $1,200, now you can put in $150 a month into your savings account. You got 2.5 years to put in $150 into the savings account. What's that, $900? So now you got.
So putting in how much?
So he's gonna put in, oh, right, so he's gonna do $4,500. So he'll have $5,000 when it's time to buy his house. I'm just made up the number $150.
Yeah.
So whatever that number, same concept, apply. I'm just saying it's $150, whatever it is, it's gonna be times 30 months. And he'll put that money in the bank every month, while making his student loan payment. But student loan debt is not bad debt. It's bad debt if you don't pay it, but it's, they can be clear, because it's gonna impact the credit score. So if you don't pay it,
Tomorrow,
tomorrow, so
tomorrow.
There's more under not the capital one part.
That's okay.
exactly.
I just.
So as long as your student loan payment's on time.
Yeah. Tomorrow can feel it, yeah. She can spill space.
Not,
Not a normal time. Okay, so wanna come back?
we're doing the avalanche. By paying that one off, we're doing the avalanche. Pay the highest one first. We're doing the avalanche. Then scenario 2, Tasha, the same amount of 3 kids, she has $3,000 in credit card debt, plus 3 cards. Then you have to back off furniture store loan, $400 emergency savings. You want to start saving more, what small changes this size does, you make to reduce debt while building savings, how can you keep it? Especially if she wants to be motivated, that's snowball. Right, so she's got, 3,000 across credit card.
Are they back or no?
Credit card debt across 3 cards.
Now,
Okay.
this is something that we talked about, but also to build her confidence up, she could potentially open a high yield savings account so her money could grow.
And she can, because she's only
So
got
you see
400
more
in
money.
emergency
Yeah,
savings.
so you see more money than what you put originally put in once you look back.
Nothing. You gotta go to their. Yeah.
IO savings account.
Yeah, that's all I was just saying.
Express has the best one right now, well, they did,
Welcome back, you guys. I heard it had some difficulty. It's okay, it's okay.
I was having a great conversation.
Wait, give them back. Oh. So, you guys want to share anything? I want to be part of the conversation. I'm feeling left out.
Okay, so we were just saying that we were on and off the call because I started driving and we got interrupted and all that. But I was saying that I was talking to one of my employees and she, a younger generation. I started with Credit Karma. Because even before Credit Karma, everything was done by paperwork, by paper. You send in a letter or a fax or something like that.
Yeah.
And then I moved on to Credit Karma. And then I talked to my employee, like I said, a younger girl. And she started, doing research and she got an app for Experian.
Yes.
So there's an app for Experian. I was like, very surprised. It's like so much easier now to keep track.
Yes, it is. Very much so, very much so. We have no excuse anymore, right?
Yeah, so that kind of like helps me. Credit Karma kind of helps me. Like it shows me all my debt, and then I can decide, oh, like this month I should really, pay on this card because I owe too much.
Yes. So
So that was
why
the conversation.
yeah. So try not to have that much debt on our hands, right? That is stifling us and stressing us out and keeping us stuck and interfering in our life decisions.
Yeah.
Okay. Anybody else in the room? You guys good? Or
What was it?
what y'all talking about, activity?
We did.
Yes.
We talked about the activity. We did it. So for Jamal,
Mm-hmm.
what we said was pay off the credit card at 18%.
Yes.
If we had paid it off, we assumed 18% payments at $150.
Mhm.
That would be paid off about 7 months. And then use the remaining time to put $150 into the savings account.
Okay.
And so that would give him about $5,000. He could save 4,500 plus the 500 that he already has. That's about $5,000. And that's the avalanche.
Mm-hmm.
So for him, we want to do the avalanche.
Oh, nice.
Right. And buying a home. Yeah.
All right. Good. I don't know if you guys can hear online, but that's a good discussion. Good. All right. So go back in here. And okay, there we go. It's working now. So when we're talking about being financially healthy, we're looking at 3 prongs, right? Being able to fully meet current and ongoing financial obligation. That means you can pay your bills and pay it on time. Feel secure in your financial future. That means, you're planning for your retirement, you put the money in retirement vehicles, or you have assets that you're going to hold on to for the future. People invest in homes, whatever it is that you have, but you're feeling secure in your retirement, not just Social Security. You have more than Social Security coming your way, right? And being able to make choices that allow you to enjoy life now. That's very important. And if you have those 3 prongs, I truly believe you're well on your way to being financially secure. So you want to be able to just be able, you know what, I want to go for dinner tonight, and you can. You know what, I just want to go away for the weekend, and you can. It is a nice feeling. Yeah, it's a nice feeling. So the formula for financial success: live below your means. I know your grandmother tell you this. Live below your means and invest the rest. You cannot save your way to wealth. You need to have a savings, but you cannot save your way to wealth. You do need to invest, okay? There is a financial review. I think it was in the chat as well. And I really want you guys to go and look at a vision board. Create a vision board. You can do it electronically. You can do it by paper, by hand, physical one. Cut out those, back in the day, cut out those magazines, put it envision yourself, what it is that you want. Create a vision board to give yourself direction. And then look at those spending habits that you have, right? Is it bringing you closer or farther away from your goal? And then after this session, what is your next step? What are you going to do next? Walk out of here and say that was a good session and that's it? Or are you going to take a step? What are you going to do to change your financial situation, to get a shift in your financial situation? That's very important. And, take a look at that. For me, so, right, all these things keep me the same. Car maintenance, that's life. Summer camp, I have to, school is ending, right? Popeyes, going to Popeyes not really keeping me close to my goal, is it? Right? So it depends on where you are financially. Getting my hair retwist, that's part of my life. I do have my own business. I'm in front of people most of the time. I need to keep myself together. So I think that's as a regular expense for myself. It might not be for you, right? And deposit money into my IRA. That's bringing me closer to my goal of that wealth building. So I really want you to think about it. What's my next step? I want to increase my contribution to my investment accounts. That's my next step. My progress that I've made, I said my entire raise that I got to my investment account. But you can't do that unless you have a budget, remember? Right? So come for that next class. Allocate, expected mileage. Although it's in May 8th or May 7th for the next class we have. And then acknowledge your feel-good moments, right? So we got some credit. So let's recap a little bit. Credit clarity, understand what your credit report is telling you, what the components of your credit report. Debt management tools, talk about the snowball, the debt avalanche, right? And breaking free from the consumption trap. Do you really need that? Do you really need that? And if you have 5 Amazon boxes coming to your door, really, do we really need that? Or if you do, fine. Say, you know what, I'm a single person, or I'm just a person who don't like to cook and I like to go out. A-okay. Where else are you gonna cut? If that's the lifestyle you want, where else are you gonna cut so you can have that lifestyle and still be financially secure? It's all about you. We're not gonna have the same life. I have 2 kids, I can eat out every day. I need to cook. So that part is not happening. But I do like vacations. I take a vacation every year. I do. I like that. So I plan for that. Summer camp. I know it's coming up. I plan all year for summer camp. Every paycheck money comes out and go to summer camp bucket in the budget. Cause my kids need to go to summer camp. I work full time, right? So when summer camp comes up, I just write a check. Here's your money. All right. So, yeah. So building a strong financial foundation takes time. It's about making smart decisions on a daily basis. True financial security is about more than just making money. It's about having peace of mind, knowing your finances are working for you. And I'm going to end you with this. Impossible is just an opinion. All right? Impossible is just an opinion. So you got this. Anybody have any questions? There should be a survey. Anybody have any questions online? You are in control of your own financial story. Steven, you have a question? Okay.
Quick question. Can you hear me?
Yes.
We're gonna get this in our email. I know I missed a couple of things because I was interrupted a couple of times. Can we get a recap?
Yes.
Great. Thank you.
Yes. Yes. You'll get a follow-up email with a copy of the presentation. Thank you. Thank you. Thank you. You can follow me on my social. I also have a podcast called Island Money 365, where we share amazing stories. And if you have any questions, you can always reach out. You can reach me at any time at my contact information.
Have to let them know, I'll put your contact information in the email.
Okay. And the contact information would also be in the email as well that is being sent out to you off this session. We also have a next session for next month on budgeting. We're going to go really deep into budgeting. That's going to be fun. May 7th. It's going to be only virtual. So no in person, no hybrid. Just going to be fully virtual at noon. At noon. So we'll talk about budget, break down the components of budgeting and savings and all that good stuff. Are there any questions? Come on, guys. I'm here for you. You have access to me. Ask me the questions. I love answering questions. And you can also send me through via email. I should tell you, like, say, for example, that you are going for a debt. I should say this just came back to my mind. Going for a loan and let's say for a mortgage or anything like that. And you got, if credit see you looking for too much credit, you might wonder what's going on, but you do have a window. 14 to 45 days. If a lot of things happen within that window, they realize that you're shopping for something. But if you keep going like every month you're shopping for credit, they might think this person is in trouble and is seeking money, so that you might put yourself at risk for that. So keep that in mind as well. That just came back to me. I'm full of information. You just need to ask. Okay, so when you guys want to, yeah. All right. So we have come to the end of our presentation. If you have no further questions, thank you guys for spending your day with the afternoon, or at least an hour with me. I hope you got valuable information. As I said before, you have access. Ask me any question anytime. I'm here for you to give you the resources that you need to just create that shift in your finances. So thank you and have a great day.
That was excellent.
Thank you. You did a really good job.
Yeah,
Thank
that
you.
was excellent. Ray, I'm shutting down. Did you put it in the chat?
but.
No, that's okay. I'll send out the QR code in the email.
Thank you.